Welcome to The Winning Trade. Each episode in this series will demonstrate how to make money in the stock market, whether the prices are going up, down, or sideways, using high probability, profitable strategies that were designed to take advantage of the volatility of the Russell 2000 and the S&P 500 indexes. Many of these strategies were designed to work together to maximize profits by flowing with the ever-changing market conditions. Follow along as we uncover the secrets of this episode's winning trade. Hello everybody and welcome to The Winning Trade. My name is John Locke, and before we get going on this, we should go over the required disclaimer and let you know that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and make sure you are aware of all your options prior to placing any trades. If you have not done so yet, check out the options risk disclaimer that this is available at the CBOE website, and the link is right here in the disclaimer material. And also note that we are using hypothetical computer simulated trades unless otherwise stated, and they are believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many different reasons. So if this is your first experience with us, again, my name is John Locke. I'm a trading performance and wealth coach with Lock in Your Success LLC, or lockinyoursuccess.com. And I'm here to guide you into the realm of what we call high probability trading. Now, in a moment, we're going to go over the winning trade, but before we do, let me quickly explain what we mean by income or high probability trading strategy. An income strategy is where we put ourselves in a position to generate profits through the passage of time rather than depending solely on price movement to go in our direction. Meaning we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to win all the time, but it does put the odds heavily in our favor, and we have a much higher probability of winning than we would doing most other types of trading. Now, if you need to find out more information when you're following along, that's fantastic. It means you're learning. It means you're discovering new things. And to help you with any information you may be missing, simply contact us at lockinyoursuccess.com or ask a question in the comments section of this video so we can direct you to where you can find the information you're looking for. So let's move on. The trade we're looking at today is something called an X4 version 17, or V17 for short. That's V as in Victor. The V17 is one of three primary trading structures within the X4 trading system. It is the most bullish structure that we have, and it's designed to maximize results in neutral to bullish conditions. It is a trade that's entered 77 days to expiration. It's usually a 60-40 broken wing butterfly, meaning we have a 60-point vertical spread on this backside, and we have a 40-point vertical spread on the upside. So here is the market situation, by the way, and this is in what is it? It's December 28th. This is pretty much immediately following our little mini crash we had back here in December, and it looks like we've had a bounce in the marketplace. But since we've just had a crash, the implied volatility is basically how they're pricing the options at a given time. The implied volatility is very, very high. That being the case, this makes this look a lot more bullish than it really is. Normally we're going to come in, this is going to be near flat delta. Now it's significantly positive, but since the implied volatility is high, we don't have that implied volatility risk as much if the market continues to go down, and generally that helps offset things quite a bit. So this is like I said, a 60-40 broken wing butterfly. It has a position, this is a 10 lot, meaning there's 10 butterflies, and the position, what we call planned capital, or the maximum amount we would like to put in the position is going to be about $35,000. It's also going to have what we call a maximum loss, or an exit loss limit of $2,500. This trade can be done pretty much the exact same way with as little as $3,500. You can do it with a one lot, and that would have an exit loss limit of $250. So Very small trading size if you'd like to try it out. We're doing this on the index called the SPX, and we're entering 77 days to expiration. Now, if the market does come down, we do have a downside adjustment strategy, and of course, if it goes up, we also have an upside adjustment strategy. Although in a market that's this high implied volatility, it's not very likely we're going to trigger an upside adjustment. Oh, one other thing I should mention is the short strikes are entered around 20 points under the money. It might be 17, might be 27, but as close as we can get with a 10-point strike to 20 points under the money is where we're usually going to be running. So here we're entering with our short strikes at 24.60. If we move this, and I'm just going to move it to our first adjustment because it happens relatively quickly. And also, I should mention, for people who are not familiar with this type of trading, this is analytical software. This software is called O&E, and it basically shows you what your position does. Across the bottom is the asset price or the SPX price, and up and down is your profit and loss numbers. So we have an expiration line, which is in the dark blue. This expiration line tells us the value of the position at the date when the options expire or sometime in the future. This curved thin line is called the T+0 line. That is the projected value of our position as of today at any given asset price point. Over time, we're expecting this T+0 line or this thin line to move up towards the expiration line. And all right, so this is what happened in the market. We had a pretty hard down day. We're down 51 points. That's a lot for the SPX. It's not the biggest we've had, but it's a pretty big move. And we're only down about $370 after an adjustment. So let's look at what happened. We were at 24.60 short strikes. And the downside adjustment strategy on this particular position is we do a rollback when we get underneath the short strikes. And we can see the asset price now is 24.58. That's less than 24.60. We're just going to sell the position off at a small loss here, at $290, and we will re-enter the position as if we started it again, down here at 24.40, which is about 20 points under 24.58, right? And let's just go through this day by day, and we'll just talk about this a little bit. If we go to the next Monday, we had a significant up move in the market. We gained a lot of money. Now, one of the things I really, really love about this position is if you look at what happened in the market, we came down and then we basically had what we call a V reversal or a very hard reversal in the marketplace. Now, a lot of market neutral strategies will happen in this case. The market will come down, the trade will get drawn down. Sometimes because of implied volatility, the trade will become drawn down, and then when it races off to the upside, when it does that V reversal, a lot of strategies lose money, or they struggle, or they have a really hard time. In other words, they don't even get back to break even, or if they do, they barely make a profit. This particular strategy in this scenario typically does very, very well. So, and you'll see that here. We had that reversal for a couple of days. We're already up $1,700, which is nice. And if we go a few more days here, actually, let's look at the risk profile for a sec and talk about an upside adjustment. So this is going to require an upside adjustment essentially when it starts to run negative delta, and we will adjust this by taking one of our long strikes here and bringing it back. Something like that. This position here, because the volatility was high on entry, it's very unlikely, like I said earlier, that it's going to require an adjustment. So this is a really simple and easy trade. And most of the time, again, another thing I really like about this position is it's very simple and easy to manage. There are trades we come in and there's no adjustments. There's trades we come in where all we end up doing for adjustments is some verticals, right? Some small verticals, which are very simple and easy to do. And then of course we have the more challenging trades sometimes where we have to do rollbacks, which this is one of those. But even if you do have to roll back, it's a simple exit and a re-entry. So it's very easy to do, very simple to manage. So let's move forward here till our exit date. Now this trade, we talked about an exit loss limit of $2,500. So if we lost if it drew down $2,500, we would be exiting the position. It does not have a profit target, but what it does have is a date exit. And the date exit on this particular trade is when the cycle 2 cycles ahead, right? So we're in the March cycle. So this would be when the June cycle, when the May cycle, which wasn't even showing yet, when the May cycle hits 77 days to expiration, this trade is exited. So let's just hop forward in time. And this is what we look like when May is 77 days to expiration. We had no further adjustments. We are hitting negative delta. Had we stayed in, this would have actually triggered a minor upside adjustment, but it is time to exit. So we were in this position approximately 60 days, which is about 2 months, and it ran a profit of $38.55 on $35,000 planned capital, a little over 10%. Sometimes it can make more than 10%, sometimes less, and sometimes occasionally you can hit a loss number also, but it's much more common to have a winning strategy. So I'd also like to note too, we do run overlapping trades, so we also have an April trade on at the same time, which looks like this here. And you can see the April trade also is doing extremely well. So that is a quick demonstration of our X4 version 17 trade, this month's winning trade. If you have any questions or comments you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video or contact us at lockingyoursuccess.com and we can get those questions answered for you. Thank you, and we'll see you next time.